I want to welcome you to lesson 4 of our course on the digital economy. We've covered quite a few lessons in the past. I hope that you're working through all of those lessons. I hope that you've also gone through our course, Preparing for Success After Prison. My name is Michael Santos. I am the founder of Prison Professors, and I truly believe that every person in prison needs to start investing their time now to position themselves for success in the future. And I'm super grateful to my collaborator, Ryan Salem, who made this course possible by giving me so much information. I'm also grateful to our sponsors at writingwrongslawfirm.com and also whitecollaradvice.com. These are two organizations I believe in. They believe in the work that we are doing to strive to help more people in prison prepare for success upon release. That means you. But nobody should be working harder than you to position yourself for the best possible outcome. So we are going to now start reading lesson number 4. This is an exciting lesson for me. It is one of the reasons that I decided to go heavily into investments in Bitcoin. And as I'm filming this lesson, I wrote these lessons a month ago, but as I am filming this lesson right now, Bitcoin is very close to crossing a new all-time high. So I'm super excited about that, and you'll understand why if you stick through this entire course. You are going to see how you can use this information to not only position yourself for better jobs when you come home, but also position yourself for opportunities to create your own income streams, just as I have done. And since I served 26 years in federal prison, you should believe that there are opportunities for you anywhere, and you've just got to find ways to position yourself for success. So make sure that you've gone through our introductory course at Preparing for Success After Prison, but also stick with these master classes such as this one on the digital economy. Let me start reading lesson 4 right now. So on August the 13th, 2012, when I transitioned from prison to a halfway house, the world had begun to accelerate through another disruptive change with technology. People were becoming more familiar with cryptocurrency. Unfortunately, I was too ignorant about technology when I got out of prison to appreciate the opportunities. So let's put the lost opportunities into perspective. Using the example of Bitcoin, during the month of August 2012, when I transitioned from prison to a halfway house, the highest price of a Bitcoin was $13.50 per coin. If a person purchased $1,000 worth of Bitcoin in August of 2012, he would have accumulated 74 Bitcoins. At the day that I wrote this lesson, that $1,000 investment in Bitcoin in 2012 would be worth more than $3.5 million. And now, about a month has passed since I wrote this lesson, now that I'm filming this lesson, and today, that $1,000 would be worth more than $5 million. Bitcoin enthusiasts anticipate that the value of Bitcoin will continue to be volatile, but over time, the price will rise. Some people speculate that scarcity and other factors will result in Bitcoin exceeding $10 million in value over time for a single Bitcoin. Now, some would say, oh, that's crazy. That'll never happen. Well, I don't think that people who were paying $13 a coin in 2012 believed that it'd be worth more than $65,000 in 2024. Based on what I am learning from creating this course and the lessons I am learning from Ryan, I am moving forward with a plan to build my cryptocurrency holdings. Fortune favors those who learn how to take advantage of changing markets. Now, of course, I understand the risks of any investment. When I got out of prison, however, in August of 2012, I didn't understand how to take advantage of opportunities with cryptocurrency. Today, we're in a different era with cryptocurrency, but still very early. In early 2024, the Securities and Exchange Commission took significant steps to advance Bitcoin's status as a viable investment-grade product. the agency approved the listing and trading of several spot Bitcoin exchange-traded funds, or ETFs. Prior to that decision by the SEC, depending upon the year, people who wanted to speculate or invest with Bitcoin had to invest time and energy to learn. At the start, in 2009, they would have had to become familiar with technology and learn how to mine Bitcoin by using computers to prove transactions. We discussed that in the last lesson. Now, in exchange for proving transactions, the network would reward miners with Bitcoins. Between 2009 and 2012, miners received 50 Bitcoins in exchange for mining a block of Bitcoin. Approximately every 4 years, after every 210,000 blocks, the reward was cut in half. The first halving took place on November the 28th, 2012. At that point, the block reward was reduced from 50 Bitcoins to 25 Bitcoins. That's what it means, halving. The second halving took place on July the 9th, 2016. It reduced the rewards from 25 Bitcoins to 12.5 Bitcoins for the miners. The third halving took place on May the 11th, 2020, reducing the reward from 12.5 Bitcoins to 6.25 Bitcoins. Now, media reports project the fourth halving is going to take place on April the 17th, 2024, which would reduce the Bitcoin reward for miners to 3.125 Bitcoins for every transaction. So this is an important reason for my investment, which I'll describe in more detail in the commentary at the end of this lesson. The halving process was designed to mimic the rate at which miners for commodities like gold earned over time. Since the blockchain only allowed for a finite quantity of Bitcoins, mining would become more difficult over time. The total supply of Bitcoins would eventually reach 21 million coins, but the total number wouldn't reach the market until 2140. In 2024, miners received and introduced approximately 19 million Bitcoins into the market since the start of Bitcoin. Each day, miners succeed in releasing approximately 900 Bitcoins. But after the next halving, which is going to take place in April of 24, the number of Bitcoins introduced into the market will drop to 450 Bitcoins a day, which of course makes them even more scarce at the same time that demand is soaring. So the halving events, together with the finite supply of 21 million Bitcoins, were two reasons why speculators believed that Bitcoin would continue to increase in value. On the first halving date in 2012, the price of Bitcoin was around $13 a Bitcoin. On the second halving date in 2016, the price of Bitcoin was around $650 per Bitcoin. On the third halving date in 2020, the price of Bitcoin was around $8,600 per Bitcoin. And when I began accumulating my Bitcoin stake, the market valued each coin at approximately $43,000. That was only a month ago, okay, a little over a month ago, on January the 31st, 2024. Although no one can predict the future, and Bitcoin has been an extremely volatile asset class, explosive growth has always followed after a halving event, as evidenced by the amount I paid to begin accumulating Bitcoin in 2024. A lot of people are anticipating the value will go up, and an asset is always only worth what the next person is willing to pay for it. In 2011, Bitcoin became more popular. Ancillary businesses began to spring up, including exchanges such as Coinbase, which made it easier to buy and store Bitcoin as an asset class or a store of value. Even today, Many people have a hard time comprehending the value of cryptocurrency, especially since Bitcoin is not a tangible asset like a gold coin. Some people refer to it as a digital currency or digital gold, existing on a decentralized digital ledger. The concept of halving or proof of work or consensus took too much energy for some people to understand, particularly those who could not move beyond the concept of fiat currency. Fiat currency is the opposite of Bitcoin. Think of the US dollar or the Japanese yen or the euro. Those are examples of fiat currency. Instead of being on a decentralized network, central authority figures, such as the Federal Reserve or the U.S. government, controls the value of such currency. When the SEC approved spot Bitcoin exchange-traded products, it took a significant step in legitimizing Bitcoin as an investment-grade asset class. Prominent investment groups, such as BlackRock, Fidelity Investments, and ARK, or ARK21, could offer investors exposure to Bitcoin through exchange-traded funds. Those investment funds would allow people to invest in Bitcoin without the need to learn about Satoshi's white paper, about halvings, or about the nuances of decentralized networks. They could purchase shares in an ETF in the same way that anyone could purchase stock. The new, more decentralized, sophisticated investment vehicles opened opportunities for pension funds, insurance companies, and retirement accounts to build exposure to Bitcoin through derivative products like ETFs or baskets that included different types of exposure to Bitcoin. Those funds would rise or fall in value, coinciding with the price of Bitcoin. They could allocate a percentage of funds to cryptocurrency just as they might allocate a percentage of funds to biotech, aviation, or manufacturing sectors. Rather than figuring out how to get exposure to the new asset class, investors could purchase shares in the new electronic funds through their regular stockbrokers. The SEC brought government regulation, which began to build more widespread acceptance of Bitcoin as an asset class. Unfortunately, people in prison have limited access to knowledge of this innovative new asset class. Through these lessons, I am passing along all that I am learning from Ryan about cryptocurrencies with hopes of helping more people prepare for success upon release. The more people learn, the more options they will have to become successful upon their release from prison. Now, in the next lesson, I'll offer more insight into a historical overview and provide a glossary of basic terms to understand. So now I'm going to discuss the investment, and then I'm going to break from the script and share something, because as I'm writing this right now, I wrote this lesson in January of 24, but as I'm filming this right now, Bitcoin is breaking historic ground. It is surpassing its all-time high, which as of this morning was $68,980. Well, right now, and I'll share the screen with you, it's currently trading at $69,080. So it's surpassed a high, all in anticipation of this halving that I'm talking about. But let me continue with the lesson before I share my screen. So in the previous lesson, I'll continue to show how I'm using my growing knowledge of crypto to make it a part of my long-term investment strategy. So after making my first two purchases, I continued to dollar cost my way into the next purchase. I set a goal of putting at least 10% of my total net worth into Bitcoin or other cryptocurrencies, but I intended to make the buys gradually. And on February the 2nd, at 7:40 in the morning, I saw the price of Bitcoin had dropped to $43,567. I considered it an opportunity to make my next move, and so I purchased a full Bitcoin. I purchased 0.55464825 for a total cost of $24,708, inclusive of the higher Coinbase fee of $543. And so my total investment at that end of that day was $44,708. I owned one Bitcoin at that time, with a total value of $43,567. And on that day, my loss was $1,140.77. So in the lessons to follow, I'm going to continue offering insight into the cryptocurrency purchases that I'm making and showing the reasons why. Because as the records above show, since beginning my investment strategy on January the 31st, the value of my investment has dropped. But I am learning a new term about Bitcoin, and it's called HODL, okay? And from my understanding, the term HODL was a misspelling of hold that has become a popular slogan in the cryptocurrency community. It originated from a post on a Bitcoin forum in 2013 where a user wrote, "I am hodling," in a thread during a time of significant volatility in the Bitcoin market. The rationale behind the HODL strategy is the belief that despite high volatility, cryptocurrencies like Bitcoin will increase significantly over the long term. Now, again, I'm providing you with this disclaimer that I am not a financial advisor and I'm not telling you or anybody what to do with their money. I am a speculator, an investor, and I make decisions based on the lessons that I learned while going through 26 years in prison. You have to make your own decisions. My recommendation is that you invest in yourself first before you make any purchases of assets. I've purchased a lot of assets, many of which have gone up in value, many of which have gone down in value. But I'm always learning, and I always have to own my decisions, just like you do. So continue working, continue developing, and understand. But let me leave you with these critical thinking questions. What thoughts do you have about putting a percentage of total assets into a specific type of asset class like Bitcoin? And next, in what ways would a finite supply of 21 million Bitcoins influence the price over time, in your opinion? And then finally, what influences do you anticipate government regulations such as SEC approval will have on the demand for Bitcoin in the future? So I'm really grateful to my editors who are able to allow me to share my screen, and they can weave it into this lesson to show you what a chart of Bitcoin looks like. But before I get into that, I definitely want you to consider being a part of our community by building your profile on prisonprofessorstalent.com. Show us how these lessons are helping you invest more in yourself and developing your vocabulary and developing your understanding of the crypto world. And if you want to do that, just send us an email to interns@prisonprofessorstalent.com. In the subject line, make sure that you write Digital Economy Course. If you have access to the Adovo platform, we'd prefer you just send it through Adovo so that we could use your responses right onto your profile. But you could also send us letters to Prison Professors. Make sure you write care of the Digital Economy Course and send them to us at 32565 Golden Lantern, Suite B-1026 in Dana Point, California, 92629. And in the last lesson, I discussed Satoshi Nakamoto. This lesson, we went over the halving and the digital economy tokens. I'm going to be very thankful to my editor for having woven in me sharing a screen with you. And I'll look forward to going over the next lesson with you. I just want you to know, building your pathway to success, it really begins now. It doesn't begin when you come home. It begins now. Avoid disruptions in prison. Focus on developing your vocabulary, develop your math skills, your writing skills, your critical thinking, and you won't be so dependent on the job market or any of the other prejudices that people with felony backgrounds face when they come home. You are like me, and you've got to focus on building your own pathway regardless of what challenges or obstacles exist. I am Michael Santos, and I believe in you. So while I was recording the lesson, you could see how this chart was changing. The price of Bitcoin is now at $68,000. You'll see up there $68,152, but it reached a high of $69,324. You could see this chart right here. That's what this chart represents. These are trend lines. These are things that I watch every day as I am working to develop my Bitcoin trading strategies. And mine are primarily buying. I don't sell my Bitcoin. but you could see what's going on here in the marketplace right there. It's jumping up, and these are called, this is a candlestick chart. This is called the wick of the candle here at the top and the bottom, and that's kind of the volatility point. The center point is the range where the price was trading during a given moment, a flashpoint in time. And up here, as you see, it went up there to as high as $69,344, which was an all-time high. And it's really quite a bullish signal when that happens, because it is showing everybody who's got a coin right now is in the black. Everybody as of this morning that had a coin as of this morning was profitable, regardless of when they bought it. So anybody going into Bitcoin right now, they're only going into Bitcoin because they expect it to go higher. And there are many people still buying, including governments, companies, people. So with only a supply of 21 million coins, there is great speculation these prices will continue to rise to perhaps north of $100,000 a coin by the end of this year, several $100,000 a coin by the end of next year, 2025. So I'm recording this to try and show people in prison and anybody who's watching our programming why I am investing heavily in Bitcoin. And I always show what I am doing. I never ask anybody to do what I am not doing. I am a big investor in this project because I know I was in prison, and I know that my job is to build a pathway to success. That's what I want for you. I'm Michael Santos. I believe in you.